Day for the Juneteenth holiday. While the S&P 500, the NASDAQ finished in the green on Friday, but the markets keep up their downward spiral. The Dow saw its worst week since October of 2020. Joining me now, Michael Lee, strategy founder. Michael Lee. Mike, always great to see you. Good morning to you. Let me ask you what you think about the recent activity that we've seen in the market. You know, there are plenty of investors out there saying we're taking a little bit of a breather today, and maybe it's time to do some bargain hunting, that we could be searching and trying to find our footing to find a bottom.
Yeah, look, I don't know where the bottom is in this market. I would say, typically the best companies bottom before, long before the market. An Amazon bottomed, somewhere in 2001 before the market bottomed in 2002, and going back to the 2008 crisis, Google and Apple, those stocks bottomed far before the overall market bottomed in March of 2009. But I'd say we're in for a ride here. The consumer has deteriorated far quicker than anything I've ever witnessed in my career. You now have soaring credit card debt with a collapsing savings rate and collapsing consumer confidence. So just to put this in perspective, lowest consumer confidence number ever. The savings rate is now at the lowest level it's been post-financial crisis in 2008, and credit card debt is at the highest level ever. So what does that say about the overall economy, especially after a month of declining, or month-over-month declining retail sales?
Yeah, no, these are all great points, and I was afraid that you were going to say that. It's funny because the president continues to get up to the podium, and he says American saving rates are the highest that they've ever been. It's just patently false. You're right, debt is skyrocketing and savings are dwindling. All that money from the pandemic has slowly made its way out the door. Meantime, you've got Treasury Secretary Janet Yellen weighing in on a potential recession yesterday, choosing her words carefully. Listen to this.
I expect the economy to slow. It's been growing at a very rapid rate as the labor market has recovered and we have reached full employment. It's natural now that we expect a transition to steady and stable growth. But I don't think a recession is at all inevitable. Well, we've had high inflation in the first half of this year, and that locks in high inflation really for the entire year. But I do expect in the months ahead that the pace of inflation is likely to come down.
Mike, it's tough to take her seriously. Many Americans out there feeling the pain of inflation, and they essentially, look at her and say, you told us that the inflation was transitory, then you owned it and apologized and said it wasn't. So it's difficult to look at the recession comments in the same way. Meantime, you've got a Wall Street Journal survey showing that economists raise the likelihood of a recession to 44% in the next 12 months after the Fed's 0.75 of a point hike that we saw last week. That was after a 28% likelihood in April. So many people see the recession down the pike if we're not there already, and they look at that statement from Janet Yellen and say, you're spinning it again.
Yeah, look, what I would say, it's good that she's out there saying this in the middle of this crisis, because everyone can see what a partisan hack she is. If we are not in a recession right now, we will be within the next quarter or two. I'd be shocked if we have positive growth this quarter, but we had negative GDP growth in the first quarter. So if we get negative growth here, boom, that's 2 quarters of declining GDP growth. What also is an important piece of information out there is that the small business optimum index is below the COVID lockdown lows, right? So we're getting it from every direction to where all this data is coming out and the leading indicators declining 2 months in a row, that the wheels are coming off this economy, and it's happened extraordinarily quickly. Okay. What I would say, though, for investors that are out there is this market moves far ahead of the economy. So in 2009, after the financial crisis, the market bottomed in March of 2009, and the economy bottomed in April, or unemployment did, in April of 2010. And that bear market went from November to March. That was about 18 months. That was the great financial crisis. I don't think that this economic slowdown, I don't think there's this massive debt bubble that's going to really unwind. This is an inflation caused recession. It's from overregulation. It's from the war on fossil fuels. It is done almost entirely by this administration to the American public. And the difference between now and 2010, when Barack Obama was president, is the national debt is not 9 or 10 trillion, it's 30 trillion. And the Fed balance sheet is not 900 billion, it's 9 trillion.
Yeah, those are excellent points. Adam.
Well, thank you, Jackie. Mike, I love the point you just made, and that is that the market moves ahead of or bottoms before the economy. If that's the case, and I agree with you, what are you buying here?
Yeah, so I think we just saw a dramatic sell-off in the energy stocks last week, and I think what a lot of that is there's a lot of big hedge funds facing massive quarterly redemptions based on horrific performance this year, because this has been an extraordinarily difficult market, and the biggest winner has been energy. So I'd be stepping in and buying some of the energy structure. And then some great things to think about is these technology names that are out there and are really high cash flow producers that are down massively from their highs, particularly in the cybersecurity world. I'd start to be looking at that. I don't know if I have the intestinal fortitude to go in and start buying technology right now, which probably means it's a good time.
All right, we're going to have to leave it there. Michael Lee, thank you very much. Always great to see you.
Thank you.
Okay, coming up, why the head of NATO says there's no end in